Let's talk about the hatchet job that is the Kenyan shilling, breaching that 100 shilling mark. Lots of worries, even some people saying because we're heading into an election year, investors are going to hold back. We're even going to see it moving nearer 110 shillings by the end of the year into next year. It's a worrying picture, I think.
Yes, it's a bit worrying. You can have all sorts of conspiracy theories about it. Politicians have money in dollars, they need Kenya shillings to spend for elections, they're pushing the rate up. So you might have a lot of conspiracy theories. But the bottom line goes to the fundamentals of the economy, which actually point to a weakening shilling. And the question that someone might ask is, was the shilling actually overvalued when it was trading in the 70s? Or is it now just basically going back to its price where it is actually supposed to be trading? We will see it continuing into 2013. We will breach the 110 mark at some point in time because basically the central bank has not come out with a stable, decisive policy measure to try and wrestle all these indicators that are running away. So that uncertainty will continue fueling speculation on the currency side.
What would be a decisive policy measure? Already there's talk that possibly they're moving towards a floating exchange rate or a fixed exchange rate to try to curb it a little bit. What would be the right thing to do?
But the right thing to do is not actually to fix the exchange rate, because that's now piecemeal policy measures. They need to go to the core of the matter, and then their mandate, the main mandate of the central bank, is to fight inflation. They need to find ways of bringing inflation back down to single digits, and as inflation goes back down to single digits, naturally you find the currency will also follow towards that that way. But the way it currently is that they are losing the inflation battle, they are losing the interest rate battle. There is no way they'll be able to do something that sorts out the shilling without sorting out the two other pillars that actually affect the currency.
Let's talk about those that are underperformers in today's market. And starting off with Kenya Power, it's down 3%. And I think that's ahead of their results to be released. We're not expecting anything stellar here. There's been a drought that affects electricity. And there've also been price curbs and rationing as well.
Yes, the main thing that might actually affect them also, KPLC, is also the exchange rate. For any external loans that they have which are not denominated in Kenya shillings. In terms of there being a drought, yes, they'll get fuel more expensive from KenGen because of the fuel cost and because of not using hydropower. But naturally, they always just pass that fuel cost to the consumer. So you'll find it won't affect their performance that much. So the results won't be stellar, as you said, but it will not be also a big surprise. So I think the market has also just downplayed the results, and the counter has lost a bit. But naturally speaking, I think the results will be in the normal expected range in such an economic situation. So we should see the stock peak a bit when the results are announced, since the devaluation of the stock price has been rather a bit hard on KPLC.
All right, on a more positive note, Total is up. Now, last week we got news that Total has entered a consortium that's looking into exploration blocks off the coast of Kenya. That seems to be a bit of an optimistic sign coming out of Total. Kenya may actually have oil. I don't know. They're going to look for it. What else are they doing correctly?
Strange enough, the news did help them support their price a bit, because their price was also getting a hammering, considering their last results were not that pleasing. With the time where most guys are announcing double-digit profits in the petroleum industry, they did not announce such good results. And for them, the price control, the pricing mechanism, as long as the price caps are there, the results won't be that magnificent. We normally expect when oil prices are jumping in Kenya, you'll find oil companies make a lot of money. So Total, really, they have to rely on such news to support their price.
National Bank, what's driving this stock up 3.5%? And just tell us a little bit about the PEs, because the blue chip banks have PEs above 10 points, which makes them fairly expensive, but still they're seen as a safe haven. What about banks like National Bank?
A National Bank, at the price it is, it's currently, I think, down 25 to 30% year to date. The volumes traded today are also insignificant, around 38,000 in terms of volume. So you find some people just taking position and accumulating as the price continues to drop down. If you look at the P's of the blue chip banks, yes, they might perceive them a bit expensive, but if you look at where the current prices are at, and you look at the results that they announced for even half year, you will find it's in line with the expected full year results that they're going to announce. We will expect 20%, 25, 30% from them this year. We'll start seeing the impact of this year's economy on these guys coming next year, because they've made money on foreign exchange.
British American, let's talk about this one. Such a flip-flop when it comes to the price. We'd thought that at over 6 shillings 50, we're starting to see stability, and as a result, the stock's been performing fairly well in the last few sessions. Not today, it's down 5.2%. So effectively, that price is not something that investors are prepared to pay for.
Yeah, basically, it has fallen into the same quagmire that Safaricom is in. If someone bought Safaricom at 4 shillings, what it hits 4 shillings, it will trigger supply in the market. When supply comes in, the price falls down again. And naturally, you'll find there are people that will try and support British America, the share price. So someone who bought at 9, when the price reaches 7 and they think it won't reach 9, or rather cut my losses and sell at 7. So they will have that effect on the share price, where people who bought at 5 shillings now at 6 shillings is a good sell. At people who bought at 6.50 they can sell. So you find upward pressure on the price will become a problem because of people interbuying below the IPO price.